Terry Ryder from Hotspotting, bringing you the latest edition of my Good News Bulletins. And leading off today, the OECD, the Organisation for Economic Cooperation and Development, says that Australia is leading the developed world out of the pandemic-induced recession, while at the same time urging governments in Australia to reform labour markets, taxes and regulation to ensure a sustained recovery from the pandemic period. The OECD has also urged the federal government not to withdraw its emergency spending too quickly and advised Australia to consider further stimulus to boost incomes and reduce unemployment. The OECD says Australia is competing with South Korea and China as the country showing the greatest economic resilience, and it forecasts that the Australian economy will rebound next year with a rise of 4.1%, provided the coronavirus is kept under control. The OECD chief economist Lawrence Boom says the Australian government has been very efficient in shielding firms and workers from the worst impacts of the crisis. Meanwhile, the relative strength of the Australian economy is boosting consumer sentiment. The monthly Westpac Melbourne Institute Consumer Sentiment Index jumped 6.3% in the June survey and has now recovered the full 20% loss seen when the coronavirus pandemic exploded in March. Westpac chief economist Bill Evans thinks the rebound is remarkable, and he says confidence has clearly been buoyed by Australia's continued success in bringing the coronavirus under control. Now, another symptom of improving confidence is that many of the Australians who asked for a mortgage holiday have now asked their lenders to let them resume making their loan repayments sooner than expected. About 1/3 of the ANZ customers who deferred loan repayments when the holiday offer was made have recommenced paying down their debt, according to Mark Hand, who is ANZ Group's Executive of Australia Retail and Commercial. Customers are increasingly looking to unwind loan deferrals, which were offered for up to 6 months as social restrictions are eased, Hand says. And he says we're seeing some customers call us to unwind the arrangement because they've got some certainty that they've got that confidence going forward. At Westpac, more than 4,000 of their home loan customers have cancelled their mortgage support package, which included a 3-month repayment deferral. An economist from Domain, Trent Wiltshire, says the early return to repayments reflects rising consumer sentiment and is a promising sign for the housing markets across the country. Now, new data is showing an increase in buyer demand as the country continues to see the easing of COVID-19 restrictions, according to REA Group, which runs the nation's biggest real estate platform, realestate.com.au. REA Group has launched a new residential buyer demand index, the Insights Weekly Demand Index, which aims to analyse high-intent buyer activity. The on-site consumer activity allows REA Insights analysts to model behavioural demand and home in on the activity of serious buyers. The characteristics of serious buyer activity includes the number of visits to a listing, looking at photos for a listing multiple times, saving the property, sharing the property, and making an inquiry with agents. According to the index, there were 11.2 million visits to realestate.com.au in the latest month under review. And Cameron Cusher, Director of Economic Research at REA Group, says as the recovery from the impacts of COVID-19 continues, shows buyers are back, but sellers, he said, are yet to follow. Greater activity from buyers is translating into solid results at auctions around the country. Almost 2/3 of homes taken to auction over the past week sold under the hammer, as auction numbers rose sharply in both Sydney and Melbourne. In Sydney, Domain reported 70% of the 449 homes offered to be sold at auction based on the preliminary figures, up from 315 homes and a final clearance rate of just over 50% the previous week. In Melbourne, auction numbers more than doubled to 410, while the preliminary clearance rate was 57% compared to 47% the year before. And Domain economist Trent Wiltshire says there's growing buyer confidence due to the improving economic outlook and restrictions easing, but transaction numbers remain low at this stage. Now, according to new data from the nation's biggest e-conveyancing operator, property transfer numbers for June are looking stronger than a year ago. New property listings are up across the nation, and refinancing activity was up 30% last month. Property Exchange Australia Chief Executive Glenn King says that while the coronavirus pandemic has triggered some slowdown in property settlements over the past 3 months, it is nothing near the doomsday levels that some predicted. And King says we're not seeing the drop to the degree that was initially predicted. There has been a slowdown, but nowhere near to the extent that has been suggested. People are still looking at transacting in property. It's safe and secure. We're seeing some positive signs of recovery in New South Wales and in other jurisdictions. We're also seeing significant increases in refinancing, with consumers taking advantage of special offer in the market. Meanwhile, new home listings have increased in Sydney, with new stock on the market rising 46% over the last 4 weeks, according to the latest Domain data, while Melbourne listings rose 22% compared to the previous 4 weeks. Domain economist Trent Wiltshire says the surge in Sydney listings is a reflection of growing confidence amongst buyers and sellers. And he says it's a big rebound in listings, particularly for Sydney. Buyers and sellers who had been holding off due to the uncertainty during the lockdown are now more confident to enter the market, with the recovery looking better than expected. Now, today, SQM Research has revealed the national residential rental vacancy rate has recorded a minor decrease over the month, from 2.6% in April to 2.5% in May. Vacancies fell in May in 5 of the 8 capital cities, but they did rise in Sydney and Melbourne, which are the cities with the highest vacancy rates at the moment. But despite the impacts of COVID-19, which has seen vacancies rise markedly in some of the capital cities' CBD areas, in 6 of the 8 cities overall, the vacancy rate is between 1.2 and 2.5%. SQM Research says rental listings appear to have peaked, with the fall in the number of properties available for rent in the past couple of weeks. SQM also published today its latest data on house prices, and in the month ending 23 June, the house price index nationally rose 0.5%, with 5 of the 8 capital cities recording small increases in prices. Sydney and Melbourne, however, both recorded decreases in the past month, but in annual terms, all capital cities have house prices higher than a year ago, except Darwin. Sydney, Melbourne and Hobart all remain 10 to 12% higher than last year with their house prices. And the chance to build a brand new home for a bargain price has lured thousands of Aussie buyers into the market to buy land. Developers across the nation report rising sales and inquiries in the days after the launch of the federal government's new Home Builder Scheme, which provides $25,000 grants to build new homes. Western Australia and regional Victoria are the best places to be a first home buyer in the wake of that Home Builder $25,000 cash grant, as regional grants and tax incentives give first home buyers in those states the most extra benefit. While the federal government scheme gives applicants across the country the same benefit, Western Australia's recent announcement of an extra $20,000 last weekend for first home buyers, and the extension by a year of Victoria's $20,000 grant for new homes in regional areas, gave qualifying buyers the biggest assistance in those areas. Taking into account all cash grants and the maximum stamp duty concessions available, regional or Victorian buyers topped the handout list of $51,000, and Northern Territory buyers can get up to $50,600. But in terms of affordability, Perth and Western Australia is the best place to be a buyer or builder of a new home at the moment. So overall, the picture is quite positive across the country. The Australian economy is ranked by the OECD as one of the strongest in the world. Consumer confidence is rising. Prices are remaining firm or rising a little in most markets across the country. Vacancy rates overall have fallen recently and remain low in most cities. Vendors are becoming more confident and are listing homes for sale in greater numbers, and Australians are busy buying land to take advantage of the federal government grant to help them build a new home. That's it for now. Terry Ryder from hotspotting.com.au signing off. We'll do another good news broadcast soon. Bye for now.